Every single week, the mainstream media tells you crypto is dead. Every single week, the red candles make retail investors question everything they believe about XRP. And every single week, quietly, behind the scenes, the most powerful financial institutions on the planet keep building on the exact infrastructure those same people said would never matter. Today, I have 3 data points that I want you to sit with. Not opinions, not speculation, data. Number 1, Bitcoin, Ethereum, XRP, Cardano, and Chainlink have all simultaneously entered what on-chain analytics firm Santiment calls historically attractive accumulation zones. The exact same signal that preceded major recoveries in previous cycles. Number 2, Bank of America is launching a real-time cross-border payment system next quarter, has appointed a new global head of digital asset transformation, and has documented existing ties to Ripple going back years. Number 3, Ripple Prime is now officially listed inside the DTCC tokenization working group, sitting at the same table as BlackRock, Citadel Securities, Charles Schwab, Goldman Sachs, JP Morgan, and the New York Stock Exchange. If you understand what those 3 things mean together, and what they mean specifically for XRP, today's video is going to give you a very different perspective on these red candles you have been staring at. Let's get into it. Welcome to XRP Verified, daily XRP analysis built honestly for US investors. Subscribe and hit the bell so you never miss an update. Let's go. Let's start with the on-chain data, because this is the signal that every serious crypto investor needs to understand right now, and most people have never heard of it. On-chain analytics firm Santiment tracks a metric called the 30-day MVRV ratio. MVRV stands for market value to realized value. In plain English, it measures whether the average person who bought an asset in the last 30 days is currently sitting on a profit or a loss. When MVRV turns negative, it means recent buyers are underwater. They are holding unrealized losses. And historically, this specific condition has appeared near market bottoms. Why? Because when enough people are sitting on losses, the weakest hands eventually sell. That selling exhausts itself. Buying pressure starts to outweigh selling pressure, and the assets that have real fundamentals behind them begin to recover. Here is where every major asset stands right now, according to Santiment's latest data. Bitcoin is sitting at a 30-day MVRV of approximately -10%. Ethereum is near -12%. Chainlink is around -9%. XRP is near -8%. And Cardano has fallen to roughly -18%. Santiment classifies Bitcoin, Ethereum, XRP, and Chainlink as being in what they call fair buy territory. Cardano has gone deeper into what they classify as a strong buy zone. Now, I want to be clear about what this signal means and what it does not mean. MVRV is a valuation indicator. It tells you where price is relative to what recent buyers paid. It does not guarantee that the bottom is in today or tomorrow. Santiment themselves note that for a sustained recovery to develop, not just a brief bounce, new capital needs to enter the market. Fresh demand has to show up. And that is exactly where the next 2 parts of today's video become critically important. Because the question is not just whether XRP is in a valuation zone that historically precedes recoveries. The question is there a reason for new capital to start flowing in? Is there a catalyst on the horizon that would bring institutional money back? The answer, based on what we are seeing right now, is yes, and it is coming from multiple directions at once. Let's talk about Bank of America, because this story is moving fast, and there is a lot of noise around it that needs to be separated from the actual facts. Bank of America is launching a real-time cross-border payment system starting next quarter, meaning July through September of this year. The system is built on the bank's existing CashPro platform and connects through SWIFT's international rails. It is designed to compete in what the bank itself calls a multi-trillion-dollar market that is growing quickly. At the same time, Bank of America has appointed Adam Dixon, a 20-plus-year veteran of the firm, as its new global head of digital asset transformation. The bank is not dabbling in digital assets. It is building a dedicated leadership structure around it. Now, here is what is confirmed about Bank of America's connection to Ripple and XRP. Bank of America has held a documented partnership with Ripple going back several years. The bank holds patents that explicitly reference XRP. Ripple's own marketing materials, verified as real, show Bank of America listed alongside JP Morgan, Barclays, and Deutsche Bank as customers of Ripple Treasury's platform. To be completely honest with you, the real-time cross-border system launching next quarter is built on Swift infrastructure. It is not confirmed as an XRP product. What is confirmed is that banks are increasingly running hybrid payment models, using both Swift for universal reach and Ripple technology for on-demand liquidity, where it creates efficiency advantages. The significance of this Bank of America announcement is not that XRP is the engine behind this specific launch. The significance is that the largest banks in the United States are now moving with urgency on real-time cross-border payments, digital asset leadership, and blockchain integration. And Bank of America's documented relationship with Ripple makes it one of the most likely institutions to deepen that connection as regulatory clarity arrives. One quote from the analysis circulating right now says it well. Bank of America has a growing digital asset strategy and a documented but mostly undisclosed relationship with Ripple. When the Clarity Act passes and XRP can be used freely at scale in the United States, it would not be surprising to see Bank of America announce what it has apparently already been building quietly. Now, let's talk about what I think is the most significant institutional story in XRP's history that most retail investors are still not paying attention to. The DTCC, the Depository Trust and Clearing Corporation, processes nearly $4.7 quadrillion in securities annually. If you have ever bought a stock, a bond, or any security in the United States, the trade cleared through the DTCC. It is the backbone of American financial markets. On May 4th of this year, the DTCC announced progress on its tokenized security service, a program being built with collaboration from more than 50 of the world's most significant financial institutions. Ripple Prime is on that list. Ripple Prime, Ripple's institutional prime brokerage, is now a DTCC tokenization service participant. It holds NYSE clearing code 0443. It holds FICC GSD netting membership number 9388. Its official trade date inside the DTCC system is March 2nd, 2026, and Ripple Prime is licensed to operate in all 50 US states. Let me read you some of the other names in that same DTCC working group, because context matters here. BlackRock, Citadel Securities, Charles Schwab, Citibank, Goldman Sachs, Morgan Stanley, JP Morgan, Wells Fargo, the New York Stock Exchange, NASDAQ, State Street, HSBC, UBS, EDX Markets. These are not emerging companies feeling out a new space. These are the institutions that define how American finance works. And Ripple Prime has a seat at the same table. Now, does this mean XRP will clear every DTCC transaction? No. Even a 5 to 10% share of DTCC settlement volume would be an almost incomprehensibly large number, given that $4.7 quadrillion annual figure. The point is not market share projections. The point is access. The point is that most crypto projects have no connection whatsoever to the world's most important financial clearing infrastructure. And Ripple Prime does. And we already know what that connection can produce. In May 2026, Ripple, JP Morgan, and MasterCard ran a cross-bank bond redemption pilot, a test that demonstrated tokenized securities moving between major financial institutions using Ripple infrastructure. That pilot did not happen because someone made a cold call. It happened because the groundwork had been laid over years of relationship building, relationships that are now formalized inside the DTCC working group. Now let's zoom back out to where we are in the market cycle, because the MVRV signal, the Bank of America digital asset push, and the DTCC integration all point toward the same larger picture. XRP is currently in a historically oversold valuation zone by MVRV metrics. Long-term holders were buying during the recent sell-off. On-chain data confirms net accumulation from experienced investors during the price dip. XRP-focused ETFs took in $132 million in May, even as price fell. Exchange supply remains near 8-year lows. Open interest has collapsed to pre-bull run levels, which historically precedes institutional re-entry, not continued decline. But here is the honest picture on timing. The Clarity Act is still working through the Senate. White House officials met with law enforcement groups this week to address concerns about certain provisions, specifically around combating illicit finance. Several Democrat senators have said they will not support the bill until those concerns are resolved. The July 4th target is still the goal, but it is not guaranteed. The more realistic window is the last 2 weeks of June into early July. CPI data is coming out this week. PPI follows on Thursday. These inflation numbers will directly influence how the market reads the Federal Reserve's next move on interest rates. If inflation continues cooling, the probability of rate cuts later in 2026 increases, and that is a tailwind for all risk assets, including XRP. June has historically been a weak month for XRP. Further downside toward the 1.05 to 1.08 range remains possible if macro conditions deteriorate, or if the Clarity Act hits additional delays. Managing your position size and understanding your own risk tolerance is not optional. It is the foundation of surviving the volatility long enough to capture the upside. But here's the context I want you to hold on to as you navigate this week. The MVRV signal says XRP is in fair buy territory, the same zone that preceded major recoveries in previous cycles. Bank of America is building urgently toward digital asset infrastructure and has a documented, deepening relationship with Ripple that predates this current launch. Ripple Prime is sitting inside the DTCC working group alongside BlackRock, Goldman Sachs, JP Morgan, and the NYSE, officially part of the infrastructure that clears and settles the backbone of American financial markets. The Clarity Act is weeks away from potentially removing the last major regulatory barrier that has kept cautious institutional capital on the sidelines. None of these things were true in 2017 when XRP hit $3.84 with nothing built behind it. All of them are true today at $1.10. Patient, informed investors who understand what is being built do not panic at oversold MVRV readings. They recognize them as confirmation that the setup they have been waiting for is getting closer, not further away. Let's close with your full summary for today. Santiment's MVRV data confirms XRP has entered a historically attractive accumulation zone with a negative 8% 30-day reading, alongside Bitcoin, Ethereum, Chainlink, and Cardano all turning negative simultaneously. Relief rally conditions are forming, but sustained upside requires fresh capital inflows. Bank of America is launching real-time cross-border payments next quarter, has appointed a new global head of digital asset transformation, and has a documented existing relationship with Ripple, including patents referencing XRP and confirmed Ripple Treasury customer status. Ripple Prime is officially inside the DTCC tokenization working group, holding NYSE clearing code 0443 and licensed across all 50 U.S. states, sitting at the same table as BlackRock, Goldman Sachs, Citadel, JP Morgan, and the New York Stock Exchange. The Clarity Act is targeting late June to early July for Senate floor movement and presidential signature. Short-term caution is still warranted. Watch the 1.05 to 1.08 support zone. Monitor this week's CPI and PPI data. The macro environment can still create short-term pressure, but the long-term build around XRP is accelerating, not slowing down. Stay informed, stay patient. Do not let short-term red candles make long-term decisions for you. If today's breakdown added value, hit the like button and subscribe for your daily XRP update. I will see you tomorrow. Stay sharp, stay patient, and as always, stay verified.